All right, it's Monday, the day before the election. I just wanted to get a couple trades in for some stocks I've got. I got 100 shares of NVIDIA here, and it's dropped a little bit this morning. I'm going to hit the trade button, sell call. Let's go to this Friday. Today's Monday. My average cost now is, let's just double check that, it's like 135. So if I do get a sign, I'm going to make some appreciation too, which is good. Right around 140 here. The delta is 39. I like that my delta is a little bit lower. I'm going to go above my standard at 20 because I'm making so much appreciation. So I'm going to collect a 186 here, go for the 141 strike at a 34 delta. And I'll change my sheet. I'll change my sheet here. 141. What was it? 38 delta? 34 delta? Let's look at SOXL or SOXL. Average cost here is 33.20. It's currently trading at 30.80. If I trade this, sell, call, don't really care if these get called away. Expiring Friday. So at my cost, 33.20, somewhere between here. I'm going to go for a little bit. My average cost is 33.20, but I'm going to go at 33 to collect a little bit bigger premium here. And the delta is 34, collecting 91 premium. Continuing, I'm going to do two. I've got 200 shares, so I'm going to do two contracts and collect 180. So 33.90 and 33. Strike price 33. Delta 0.33. Current price 30.76. It's a call, and it collected less than I was expecting, 180. So that's my trade so far for this Monday. It puts me up. It's the 4th of November. It's early in the month. To 285 in premium. So if I could do this every week, I would hit my goal of 1,000 per month. View for the week ending November 8th. I'm a little late. It's Monday on the next week, but I thought I'd make my video. Better late than never, right? This week, let's see what happened. It was kind of a tumultuous week. We had the election, and the stock market shot up quite a bit based on people's perception of what's going to happen. Maybe, I don't know. But looking at my trades, I had this going from last month. I think this expired on the, I don't think that's right. But I rolled out this AI to the next week. This SOXL was expired. I got $160 premium on that. Going back to AI, I didn't put the money spent to buy it back here. I put it in the next month here. So I bought this back for $29, and I'd collected $31.50 for this new one. So still collected $250 for that. But the stock market had jumped up. I was selling below my cost, so I didn't want to let those go, and I just rolled it out. So this SOXL expired. This NVDA expired as a put. $140 premium there. So I redid these in the next week. NVDA. I've got I had a call out for strike of 141. NVDA went way up after the election. So so I missed out on everything from 141 up to 147, but that's okay. That's not why I'm doing this. I'm doing this to make premium, which I did at quite a bit of premium here at 105. I'd be happy to hold the stock. I might do some more cash secured puts, see if I can pick up some stocks, but it's starting to get into what I think maybe a bubble territory. That's kind of why I'm out of Palantir right now. It's way into bubble territory, and I think things are just, it's not sustainable with the some of the statistics on those stocks. SOXL, cash secured put, 2 contracts, collected 180. AI collected 31 after buyback. And then I'm doing a trade on IWM. This is from the weekend. I don't know if this will come out on Monday like this, but IWM here. I'm doing a 239 strike. I'm gonna have to redo this before the market opens. It's 4 o'clock in the morning here Pacific time, so it's early in the morning. But when I wrote this, the stock price was at right around 239. So I'm trying to go at the money or just in the money a little bit on these and collect a lot of premium. And then I'm playing with the idea of just flipping between being assigned and just selling covered calls, cash secured puts right at the money to keep flipping. I don't know if that strategy will work, but I've been doing it, testing it in a spreadsheet like this. So for IWM, for example, starting this week, start price was 221, so I did a strike price at 222, just in the money by $1, and would have collected 141. This is just possibilities. I'm seeing what I can do with my account. I do have this amount available, and this was assigned if I had been playing this, just kind of a mock-up. And this is a B code. I'm doing like trading off between 2 sets. So I've got this B's, I got these A's. So the next day I did my A, which is another put. Starting price is 222 and the strike price is 223, collecting 112 for that. So the next trade for this B will be a call. So I'm putting my cost as a strike price, even though my start price might be higher. I can maybe go higher. What's the strike price there? But if it ends up going down after I've been assigned, I'm not going to sell below my cost. So sometimes I don't collect very much premium. You can see down here, that's what happened here. Like this one, my strike, or I was assigned at 225, and then the stock went down to 220, and so the delta was 0.02, and I only collected $2 for that, and this other trade $4 for that, and then 31 and 8. So I'm playing around with that. I might play around with going, even though, I might play around with not going with my cost and losing a little having a little NAV erosion, but for now I don't want to do that. So I'm playing around with this average these weeks, like 831, 654, 119, 325, and this last week I would have made 1604. And so I've got this trade in here for today, a 143. I'm going to replace this though. So when it gets closer to market open, I'm going to see what the start price is. If it's 241 now, I might do in the money put it 242 and collect 381, or I might go just out of the money at 241, collect 291. So it's only 420, and I'm going to wait until the market opens and make this trade, and I'll put that in my sheet. I'm also looking into maybe doing a poor man's covered call. I have not done one yet, and I've been looking at them. They look pretty cool, especially maybe if the market's cooling off a little bit. So I'm researching that. So after this week, if this IWM works out, I'll have the cash back if I don't get assigned. I've got 25,000 to work with right now. If I was going to do it, I would do it on an ETF. So this is the Russell 2000 ETF, and it follows the mid-cap stocks, which with rates going down, mid-cap companies like to borrow a lot to grow. So I think they're going to do really well. And it's cheaper than like SPY or QQQ. And so what you can do is so it's a calendar spread, diagonal calendar spread, where you buy a call deep in the money, and it's called a leaps, which means it's a year out or more. Doesn't necessarily need to be that far, but we'll call it a leaps. So if I go out to like September of next year, 312 days away. By the way, I'll make another video on how to do leaps. I'm just kind of going through the motions here, so don't worry if you don't quite understand. But the way it works is, if I wanted to do regular covered calls on this, it would cost me, $24,129 because the price right now is $241.29. So times 100 shares. If I wanted to do one contract, that's what that's the collateral I would need. But with the leaps, it costs less and it acts as the collateral. So at this date, if I go down to, you want to pick a delta of like 80 or so, 80 or 90. I want to choose one that's like around 80. So here's 79, 82. So if I pick this one, it's going to cost me times 100 shares here, $40.89, $4,089. And this will act as the collateral. So if I'm selling covered calls against this and I get assigned, I can always use this as a backup to get 100 shares. But first I want to plug this into option strat. I'm going to choose IWM, expires September 19th, 2025, strike price at 210. September 19th, strike price 210. So here's where I am now. This cost me $4,066 roughly. You can see here, $40.89. If the price goes up to my break even, that is only 5.3%. So in the course of almost a year, I would expect this ETF to go up 5%. Let's take a look at what it's done last year. It's gone up just 1% today. Over the past year, it's gone up 42%. 3 months, it's gone up 16%. So if it actually went up, you can see here 14%, I would make $2,066 if I decided to sell this leaps. But what you can do is then once you've got that collateral, you can go sell calls. So if I go sell call and I choose like a weekly and choose the weekly expiration, if I go to my normal 20% or below, I can make this is pretty close to 20%, 21, but the market's been jumping up quite a bit lately, so it's safer to go at this 17 delta, and I could collect $65. So if I did that every week, I could really pay down the cost of that leap and maybe pay it down all the way to zero, so everything else would be gravy, and then I could sell this at a total profit if the price went up. And if the price doesn't go beyond break even, then got some problems, but it's not very likely that this ETF is going to, in a year be less than 5% increase. They always tend to go up. And that's why I like these large ETFs like SPY, QQQ, and IWM, because there's no one, there's 2,000 companies in the Russell 2000, so there's no one stock that's going to have a problem and pull things down. Plus there's lots of activity and volume. You're always going to be able to buy and sell your trades much easier than sometimes individual stocks. If you're on an individual stock and they have a problem, just like SMCI, man, it just crashed and burned. All of a sudden they have all these accounting problems, and their accounting team quit, and they can't get their reports out, and they'll probably be delisted from the Dow. Those kinds of things are not going to happen with investing in these large ETFs. So anyways, I'm playing around with that. I might do this next week after I see what happens with my IWM daily at the money calls and puts. That's where I am right now. Last week I had mistakenly put this premium collected 183 into my strike price, which was wrong. I collected 183. So I updated this and corrected it to 183 here. So that puts me up to a monthly income of $508.50. Haven't covered any dividends or interest or anything yet, and I got a lot of trades left to go. It's still not even mid-month, so hopefully this new at the money covered call strategy. We'll see how that works out. If I can make 143 a day, that would be good. But things will happen. I don't know. I have to adjust as it goes along. But that's it for my report for the week, and I hope you got something out of this. If you did, then make sure to hit that like button and subscribe, blah, blah, blah. And we will see you on the next one. Thanks a lot, friends. Bye.